Hello there, Maverick Traders. This is Imri, and I'm here today with our currency recap for December 8th, 2022. Hard to believe that this year is almost over. I don't know about you, but it's absolutely flown by for me. Okay, so let's kick things off with some broad market analysis. Stocks snap a 5-day losing skid. Cryptos are up as well. Gold slightly up. Oil more or less flat, down slightly on the day. And the dollar has drifted a little bit lower. Let's get into it. So first up, we have the S&P 500 index cash basis. And as you can see here, we've broken out of this ascending channel. I don't think that necessarily is a death sentence for the market, but it is a little bit concerning. I mean, my view of this market is that we were going to trade closer to 41.20. I mean, we've gotten to just about 20 points from that target before breaking sharply lower. I have a feeling now that we're going to test the 20-period moving average in the orange there. So I do see a little bit more downside in this market before we can look for a lasting tradable bottom. It's not too different in the total world stock index. In this market, we did hit the target I was calling for, which was 90.70, and I do think we're going to pull back a little bit further. I'm not quite sure whether we're going to test the 20-period moving average in this market, but somewhere in the 85 to 86 region is where I'd expect us to find support if we do continue to pull back. That would basically fill the gap from early to mid-November. And over in cryptos, I mean, we had that large move down off the back of the FTX collapse, and it's natural that we'd see somewhat of a bounce there. I think we'll see, broadly speaking, higher prices in the crypto market. But, I don't think this bear market's quite finished yet. So I'm looking for a test of that moving average, and then there could be some fireworks to the downside once more. If we take a look at a broad-based market outlook, we're above the 20-period moving average, below the 50-period, and the slope is getting a little bit iffy. But all that being said, we can still score this market a +1, although it's a very cautious +1. In my opinion, we're entering a neutrality zone where it's going to be dangerous, and there's the potential to be cut up in both directions. So, if you are a currency trader watching this, and you dabble in trading the SPY, for instance, or the E-mini futures, perhaps, I think now is a time to prioritize being nimble if you do trade those markets. In terms of news, we have some inflationary news coming out tomorrow. So we've got core PPI and PPI and consumer sentiment all coming out tomorrow morning. The core PPI and PPI data will be out early, 6:30 a.m. Eastern time. And then we're going to have, this is on Mountain time. So that's 8:30 a.m. Eastern time. And then at 10 a.m., we're going to have the consumer sentiment news. So those are that's in the times here are in Mountain. So you just add +2 to get to Eastern. Okay, and then next up, we've got some currency analysis. All right, so kicking things off with cryptocurrencies. Like I said, broadly speaking, all the major cryptos that we track have been up on the day, Ethereum being the clear outperformer. And over on the fiat side, the yen was the biggest loser on the day. Not surprising with the rally that we saw in equities, but the dollar was fairly weak as well. And then on the outperformance side, the Aussie was the relative outperformer for the day, with all the other currencies lagging a little bit. In terms of velocity, there is some interesting stuff shaping up here. I do like the velocity scores in the euro and the Aussie. I'd be cautious of pairing them against the US dollar or the Canadian dollar. However, we're going to take a look at some price charts in a moment. So if you're going purely off the velocity scores and there is a short-term play there, you can take a look at those two North American currencies, but it's the yen setups that I find more interesting right now, especially if the market can put in another good day tomorrow. So I am expecting that next leg down in the S&P, but it is possible that tomorrow's an update too, and then we get that pullback I'm looking for as we head into next week. So with that being said, let's take a look at some price charts and tee up some potential trades. So the reason I'm nervous about pairing anything against the Canadian dollar is that, I mean, the Canadian dollar has just plummeted. We're well below the 200 period moving average. The Bank of Canada has just issued some more dovish guidance, from Wednesday's rate decision. So there are lots of fundamental reasons to be bearish the Canadian dollar, I suppose. The issue I have is that we are so extremely oversold in our momentum reading on the relative strength indicator. And there's a large gap between the moving average, the MACD moving averages, and the MACD histogram. These are two momentum indicators that I follow closely, and I know them very well. This kind of setup is rare, and it is dangerous to sell into. You could be selling into a hole here. I don't mind being short the Canadian dollar, but I really would want to see some kind of relief rally first, even if it's just people liquidating short positions. So I would not be surprised if we saw a relatively sizable rally in the Canadian dollar over the next few weeks. And I believe that will ultimately turn into a shorting opportunity. If we take a look at the weekly time frame, you can see we're approaching that weekly 200 period moving average. So if you did want to be bearish in the short term, that would be a reasonable target. However, you can see here, there is a ton of support. I mean, this has been stiff resistance going back to 2017, the levels that we're in right now. So it makes sense to me that the market might find support here. And just to give you the view on the dollar is also getting oversold, or it hasn't quite yet gotten oversold on the dailies in terms of the relative strength index, but I do see a tentatively bullish MACD crossover here. The other thing is that we're right on the 200 period moving average. So I'd be inclined to let the market alone, well enough alone, and just see what it can do off of this 200 period moving average. If we can find a tradable bottom here, I think that would be great in terms of currency trades, because I think the risk is skewing back to the upside for the dollar, even if it is a rally in a early developing bear market. Okay, so other than the North American currencies, the euro is really interesting to me. I said my prediction is that we're going to stall in this gray box here, which I expected would serve as tough resistance, but instead we've broken out above it. And we're well above the 200-day moving average as well in the euro. So that's interesting to me. From a momentum signature standpoint, we've got some bullish crosses here in the MACD, above the zero line of the MACD histogram, and we're trending well into positive bullish momentum territory on the relative strength index too. So that combined with the day's broadly positive velocity score leads me to look for potentially some good opportunities in the euro, perhaps relative to the yen. We're going to take a look at the pound next. For those of you who have been following my currency recaps, you know that I've been bullish the pound, and I continue to be bullish the pound. I think the spike bottom that we put in back in late September is meaningful. So long as we're above this gray resistance zone here, and so long as we're above the 200-day moving average, I think there's good reasons to be bullish the pound. And then the currency that I'm bearish on here is the yen. We ran smack dab right into the 200 period moving average. Now, I do believe this pattern is ultimately a reversal pattern, but I also think the yen has gotten a little too extended to the upside, and we're going to start seeing the yen pull back. Our short and intermediate term moving averages, the 20 and 50 period, aren't too far below from where we are. So I think there might be a day or two, maybe 3 or 4 days even of shorting the yen here before we run into some good support. So we'll have to wait and see how that plays out. But if you ask me right now, I'm going to continue to look for yen weakness. And if we break this upsloping trend line here, then there could be room for even more fireworks in the yen. All right, so that's it for me in terms of potential trades. In conclusion, there have been lots of intraday swings recently. Be careful. As always, follow your trading plan and follow proper position sizing. Here's what I mean about following the plan. In your trading plan, you should know what kind of trader you are, whether you're extremely short term, more of a swing trader, more of a position style trader, whatever the case might be. In an environment where you have lots of intraday swings, that favors day traders. But it's pretty rough for intermediate term swing traders because you're just going to get chopped up. There are certain market conditions which are more conducive to good trading for certain trading styles. As more of a swing trader myself, I recognize that this is the kind of market environment where I have to be extremely judicious in terms of what trades I pick. So that's what I mean when I say follow the plan. Know what kind of trader you are and stick to that. you don't have a lot of experience day trading, now's probably not the time to start on a live account. But what you could do is experiment on a paper trading account and see how you do. See if your swing trading plan can be adapted for day trading kind of environments, all right? But respect the environment we're in and respect the trading plan, because the trading plan that you have right now is what brought you to the dance, right? So keep following that plan. All right, traders, that's it for me. Great to speak to all of you again, and I look forward to seeing you next week. Take care, everyone. Goodbye.